All right, everybody, gold and silver are having their turn, but when is Bitcoin going to finally run? Today, I'm going to try to answer that for you because gold just screamed through $5,100 an ounce for the first time in recorded history, and silver has been having an even bigger tantrum. It spiked to $117 per ounce, putting in more velocity than its entire 2011 top, but with half the liquidity and 10 times the speculative twitch. And I think that all of us are agreeing this is what panic looks like when capital has compliance restraints. Because when we cut to Bitcoin, we see the same macro backdrop, the same inflation tail, the same geopolitical dysphoria, and yet BTC is barely holding 89,000 right now. And with over $1.7 billion in weekly fund outflows. This divergence is how the system routes capital when the fear is still on and the risk budgets are still off. So we got to think about how mandates work, okay? Gold is allowed with mandates. Gold is liquid. Gold has 50 years of custody rails that have been built and a compliance department that doesn't break a sweat. And when we look at silver, it is the junkyard dog of all inflation hedges. We know that silver has been there for the retail cavalry. When silver outpaces gold, it's like the VIX coughing blood. This is your blow-off flare. So think of all the capital out there that's just trapped behind mandates. We know as Bitcoiners that it requires liquidity, it requires a lot of conviction, and it also requires a volatility budget. And that means it's not the first responder because of all the mandates that are out there. It is the second wave, and it always trades at the edge of marginal capital efficiency. So if you look at real yields out there, real meaning the yields adjusted for inflation, they're looking at 1.95% right now, less than 2%, which means that the long duration end of the curve is still suffocating anything that requires time to pay off. And we know because we're orange-pilled that Bitcoin is the apex long-duration asset. You don't bid the apex until the air returns. So this is where we're at right now. Gold is pricing the past, silver is pricing the panic, and Bitcoin is waiting for the next bid rotation. So now you're going to watch what happens when real yields start to crack even more, the volatility starts to ease a little bit, and the dollar continues to bleed. That's when this $89,000 base turns into a catapult. So first, let's talk about the mechanics because there is a reason why the metals move first and Bitcoin always lags. It's about constraints. Capital doesn't just flow to the best trade, it flows where it's allowed to go to first, if that makes sense. We know that gold is greenlit by every single central bank out there, every single pension fund chief investment officer, every single 65-year-old portfolio manager with his Bloomberg terminal. It is the inflation hedge with tenure everybody knows about gold. So when you take Bitcoin, the more high convexity asset with the lowest political immunity and the highest volatility penalty, it only unlocks once the three core conditions align. That is, real yields breaking down, volatility regimes collapsing, and fund flows flipping. So number one, when it comes to the real yields breaking down, you need the 10-year TIPS yield to roll. It does not have to flatten, it has to roll because that is the discount rate for everything with duration, and Bitcoin is nothing but duration. Then when you look at the volatility regime, the VIX, the credit spreads, when they come in, the risk budgets reset, the VAR models expand, and allocators start to look for convex payoffs again. And then when you're looking for the actual rotation once it starts, 2 consecutive weeks of positive Bitcoin ETF and fund inflows while gold inflows are stalling, that is the confirmation, that is the capital signal screaming that rotation has begun. And until those three align, Bitcoin is just coiled optionality, especially for the people allocating capital locked behind mandates. You see, most investors out there, they want to wait for the price to confirm the narrative, but the best trades start when the narrative hasn't caught up to flows. That's where the money is made, and that is the regime that we need to front run. It's easy to frame this conversation as Bitcoin versus metals, but it's really about the regime. It's about understanding how capital migrates under constraint, from safety to convexity to euphoria as well. Bitcoin really sits at the center of this capital migration, and when the doors open, it is going to explode. So let's look at a historical example, okay? 2020, the most surgical Bitcoin rotation in modern history. August 6, 2020, gold tagged an all-time high at $2,072 an ounce. That was a macro scream. There was a lot of dollar weakness going on because of the stimulus euphoria happening. You remember your $600 COVID stimmy check. And then it all coalesced into the biggest flight to hard assets since Bretton Woods totally vaporized. But this is what most analysts miss. That was the top, because gold began to stall out. When this happened, it was very sideways and sluggish. And at the time, Bitcoin was sitting at $11,000 only. It was completely uninvited to the inflation party. It didn't look weak. It looked excluded. And then came the inflection point. Because by late October, the Fed opens the monetary spigots even more. And then something important happened in the flows. The flows to Bitcoin turned decisively positive while gold funds just totally flatlined. Then if you fast forward to November 24th, 2020, what happened? Bitcoin hit an all-time high, 19K. It rocketed past the 2017 all-time high. It melted faces, and it triggered a 3-month vertical run while gold stayed completely flat during that entire move. This was the rotation model in its purest form. Gold goes first, Bitcoin follows once the liquidity really accelerates and metals start to stall, and the lag was 10 to 16 weeks. So these were the casual flow mechanics visible in the price, in the flows, in the rates data, and Bitcoin's move didn't begin until after gold exhaustion, not before. And this is your timing signal once you see gold hit an all-time high. Because historically, once you have seen capital stop running to gold and start running into volatility, that's when Bitcoin performs its most violent act, outpacing every hedge it used to be excluded from. So let's rewind even further to a less sterilized chaos cycle, looking at mid-2016. June 24th, 2016, we know that Brexit hit and gold spiked hard, 8% intraday, settling just under $1,360 an ounce. That was its highest level in over 2 years. The world was pricing in contagion risk, Eurozone unraveling, and trade fragmentation. Now let me ask you, does that sound familiar to you at all? This was textbook run to safety. Gold did its job. Everybody else was just holding their breath. But then you look at Bitcoin. Did it rally slightly off the news? Yes, it did. But then it spent months ranging between $500 to $800. It was months of chop. There was no breakout. There was no frenzy. It wasn't the capital magnet yet. It was still the asymmetric tail bet waiting for its thesis to come into phase, because we know that the market still thinks Bitcoin is the risky asset when it's anything but. And we know that the broader market at large didn't suddenly understand that Bitcoin was the risk-off asset. So you have to ask, what changed? What macro dominoes started to fall in sequence for the Bitcoin run to happen? Number one, the halving hit in July 2016. The supply shock was initialized. And then number two, the dollar continued to weaken in H2 as the global growth expectations bounced. So the yields continued to stay suppressed, and then money began to rotate into what they perceived to be as risky. And then by Q1 in 2017, the capital started sprinting toward Bitcoin with huge size as this growth convexity play that was in a world that was totally starved for upside. That's when Bitcoin began its 20x run. It climbed from $800 to over $19,000 over the year, while gold flatlined into irrelevance. So what's the lesson here? The lesson is that when policy fear drives gold vertical, maybe that is relatable to today. Bitcoin just waits. But once the policy clarity returns and the volatility regimes start to settle, Bitcoin doesn't just catch up, it renders the entire gold move irrelevant. And sorry to say this, but history says that sometimes this rotation often takes quarters and not mere weeks. This was a different tempo from 2020, but the structure was pretty identical. Gold spiked on fear. Bitcoin absorbs the macro reset once the capital is actually willing to own some volatility again. So we're kind of watching the same shape now, and just like in 2016, Bitcoin's base today is starting to signal some staging. So now we can look at the counter example, which was the year 2022, and this one matters because this is where the theory kind of breaks, or rather at least where the wrong assumptions break. March 8th, 2022, gold touched $2,069 an ounce, just shy of its all-time high, riding this geopolitical panic wave because if you remember, Russia invaded Ukraine and global energy markets started to go haywire and everyone just piled into their classic safe haven assets. If the Bitcoin gold rotation theory were as simple as metals up, Bitcoin next, we would have seen a monster BTC rally. Instead, Bitcoin got obliterated during the crypto winter. If you've been around long enough, you remember that time almost 4 years ago between March and June 2022, BTC fell from 42,000 to 20,000. Full risk capitulation, leverage totally wiped, volatility exploding, stablecoins depegging, the entire crypto space was hemorrhaging capital. So this is important. You have to ask what happened. Everything that triggers a rotation into Bitcoin actually didn't happen. We know that real yields actually spiked. The 10-year TIPS yield jumped from -1% to plus 0.7% in 5 months. The dollar soared, the DXY went vertical, and liquidity conditions deteriorated. QT was in full force at this time. The credit spreads were widening, but the crypto fund flows totally collapsed. I looked this up from CoinShares. They logged 4 straight weeks of outflows, and it didn't stop there because no inflows obviously means no bid. So gold held up and Bitcoin got nuked. And this is the critical point. Gold can survive a tightening cycle because it's a safety asset. It fits inside these macro drawdown mandates, and Bitcoin doesn't. Bitcoin is not an inflation hedge under tightening. It's an option on the future of liquidity, and liquidity was gone. So when people ask, gold is running, why isn't Bitcoin? That is your answer. Because Bitcoin doesn't chase fear, Bitcoin chases liquidity, which is the difference between a monetary hedge and a capital rotation engine. If real yields are rising and dollar strength is accelerating, Bitcoin sits in purgatory. It doesn't matter how high gold goes. Which is why the model of Bitcoin following metals, it needs that macro confirmation, not just the metals momentum. The metals can go vertical, but until the yields crack and the flows return, Bitcoin doesn't. But what is important is that the macro regime that we are in looks a lot more like the scenarios that did not occur in 2022. Hopefully the broader crypto industry learned their lessons from now. Crypto is a dirty word. Bitcoin, not crypto. Come on, people, get with it. So here's what everything points toward right now. Gold and silver, we know they're in full blow-off mode right now. The charts are insane, especially considering how big the assets already are. Silver is throwing around the entire market cap of Bitcoin every day right now. So when you look at the charts and you look at the historical correction of metals, it does seem like there is perhaps a top, at least in Q1 of 2026. It doesn't mean that they crash, it just means that the asymmetry starts to fade. A lot of the money's already been made. The rotation trigger doesn't just come after the metals high, though. Remember, it comes after, when the flows stall and the macro window cracks open. So if you're looking to the historical examples of how Bitcoin follows after the big gold runs, the cleanest analog is the year 2020, which says that we should expect between a 10 to 16 week lag between a gold top and a Bitcoin breakout. That puts the probability cluster for Bitcoin rotation between April and June 2026. That actually lines up with the new Fed chair that's coming in that will likely be cutting rates because Daddy Trump says so. But this isn't a countdown. This is obviously still conditional. It's conditions-based windowing. If you see the real yields down, if you see the VIX being sub 16, if you see the gold ETF inflows starting to stall out, that means it's signaling peak saturation. If you see the Bitcoin ETF inflows starting to rebound, until that list kind of lights up green, I really think that Bitcoin is going to remain a loaded spring. If you just look at the global gold ETFs, they currently hold about $200 billion in assets. A 10% reallocation into Bitcoin would move $20 billion. At current pricing, that buys around 230,000 BTC, more than the entire monthly issuance for at least 3 years. And based on the empirical elasticity data from 2024 to 2025, about a 0.8% price move per $1 billion net inflow into BTC. That means that you get a raw 16% Bitcoin price uplift, which means that Bitcoin would move from the 86,000 to 89,000 range right now into the perhaps 105,000 to 110,000 range, but reflexivity is the point. Once inflows begin, we know that convexity will just attract more capital, which drives the price, which forces more inflows. It's not linear, it is a regime break. The real rotation is going to begin when liquidity returns and mandates shift from preservation to convexity. 2026 is really starting to shape up exactly like 2020 and 2016, with one big caveat. The capital base is a lot larger this time, and liquidity instruments are actually a lot stronger as well, and that means the reflexivity is probably going to be faster. So if you're positioned right now, I think that you're early. There are a lot of bullish macro factors that are great for Bitcoin, especially when you look at the history of the asset in terms of how it has responded during these regimes. But if you're waiting for confirmation, guess what? That means that you're chasing. And if you're ignoring the rotation model altogether, that just means your exit liquidity. If you want to be positioned before the rotation happens, Swan Private is for you, because Swan Private helps high net worth families, family offices, and individuals be positioned in the apex asset before everything is consensus. And they help you build a generational wealth position securely and strategically with the best help that can be offered in the Bitcoin industry. If you want to be positioned before the funds start to flow back to the apex asset, Swan Private is for you. Go to swan.com/no-second-best to learn more. My name is Adam Livingston. I am the Bitcoin Wizard. I hope you have a terrific day. We are bullish Bitcoin forever here at Swan, so please like this video and subscribe to the channel as we continue to give you the daily commentary during the greatest wealth transfer in the history of humanity. Have a terrific day. Do not party too hard. Class dismissed.